Welcome to a practical guide for landlords and the self-employed on making tax digital for income tax self-assessment, or MTD ITSA. This new regime is mandatory from April 6, 2026, for sole traders and landlords whose gross self-employment plus property income exceeded £50,000 in the 2024 to 2025 tax year. MTD ITSA has three phase deadlines. Phase 1 begins April 6, 2026, for those with a gross income above £50,000. Phase 2 starts April 6, 2027, dropping the threshold to £30,000. Phase 3 starts April 6, 2028, with a £20,000 threshold. If you are below £50,000 for 2024 to 2025, you remain on the existing self-assessment regime for now, but should still plan ahead. From April 2026, MTD ITSA covers individual sole traders and landlords whose combined gross income exceeded £50,000 in the 2024 to 2025 tax year. Importantly, the test uses gross income, not profit, and combines both self-employment and property income. Limited companies are not included. Partnerships have been deferred beyond 2026 to 2027. MTD ITSA replaces the annual self-assessment return with three distinct obligations. First, digital record-keeping requires capturing records using functional compatible software. Second, quarterly updates summarize income and expenses, due 1 month and 7 days after each quarter end. Finally, a final declaration is due by January 31st, following the end of the tax year for year-end adjustments. You will need HMRC-recognized MTD ITSA software. Major UK accounting platforms like Xero, QuickBooks, FreeAgent, Sage, and FreshBooks all have MTD ITSA modules. If you prefer spreadsheets, you'll need bridging software. Starting to use your chosen software now is recommended to ensure familiarity before the live submission deadlines. MTD ITSA introduces a points-based penalty system for late filing. Missing a deadline earns 1 point, and 4 points for quarterly filers trigger a £200 fixed penalty. Points reset after 24 months of full compliance. Late payment penalties, which are separate, start at 3% after 15 days, 3% more at 30 days, and 10% per annum thereafter. Taxpayers below the £50,000 threshold can voluntarily opt into MTD ITSA. However, if you are above the threshold, compliance is mandatory. The only ways to exit the regime are to reduce gross income below the threshold for 2 consecutive years, cease the activity, or apply for the very limited digital exclusion exemption. To prepare before April 2026, start with this 6-step checklist. Confirm whether you are in scope based on your 2024 to 2025 gross income. Choose your MTD-compatible software and practice using it now. Open a separate business bank account and connect its live feed to your software. Categorize your transactions monthly and authorize your accountant as your MTD ITSA agent. MTD ITSA changes the rhythm of tax compliance to a quarterly discipline, which can simplify financial planning. Accountancy fees may shift to a monthly retainer model, and software literacy becomes essential. Landlords should note that each property is one income source. Section 24 calculations still apply, and joint properties need 2 submissions. Limited companies remain outside MTD ITSA. In summary, MTD ITSA is mandatory from April 6, 2026 for those with income above £50,000, decreasing over time. It brings 3 new obligations and a points-based penalty system. Choose HMRC-recognized software and start using it now to get familiar with the workflow. Consider incorporation if you are near the threshold. Book a free consultation for help with your MTD ITSA preparation.